Moving on to the main topic of my presentation today, Africa A&D. Now I should say that all the data that you see within this presentation draws on the time period of January 2016 till present. And we're really talking about traditional, conventional A&D activities, so farm outs, divestments, corporate takeovers, but we're ignoring things such as license awards. I thought best to start with a very high-level overview of what we've seen in Africa over the past 4.5 years. As you can see from the heat map on the left-hand side, deals have continued across Africa and across the full continent. That's really been led the way by West Africa, where we see a market share of about 60%. North Africa follows with about a 25% market share, followed by East Africa with 15% of a market share in terms of deal count. Now, as you can see from the heat map, there are a selection of countries which have elevated levels of deal flow, hotspot areas. The more mature hydrocarbon provinces of Egypt, Gabon, Nigeria have continued to be active from an A&D standpoint, predominantly focused on production transactions. But what's been really encouraging for frontier exploration has been the activity we've seen down in Southern Africa, specifically Namibia and South Africa. Now, shifting attention to the right-hand side in the column charts, we can get a feel for deal flow and how that's developed through time. What you can see is we've been on a gradual increase in deal flow over the past 4.5 years, and that's largely been underpinned in Africa by the exploration market, as you can see. Now, whilst exploration has underpinned the market from a liquidity standpoint, it's really been the development and production assets which have really driven the value for the market. And it's been these asset types which have attracted the multi-million and multi-billion dollar transactions. Now, the one thing you cannot ignore on this slide is, of course, what's happened in 2020. Market activity has really ground to a halt, and whilst there were signs that perhaps the A&D market was beginning to cool even prior to the full impact of COVID and the oil price crash, these events have really slowed down deal flow activity. The early part of 2020, January and February, saw a couple of fairly modest-sized exploration transactions take place, and the largest transaction to occur in the year to date has of course been Total's purchase of Tullow's assets in Uganda for just over $500 million. Now, whilst that is of course a very material transaction, it is, as I'm sure many of you are aware, a transaction which has been in the works for quite some time. So just looking at deal flow activity on a country-by-country basis, we can really split these deals into kind of two distinct packages. Towards the left-hand side of the chart, you really see the high-value transactions predominantly focused on production, development transactions typically taking place in, as we'd expect, mature hydrocarbon provinces. But the bulk of the chart, the middle and the right-hand side, really is where we see exploration come through. And as you can see, there are a number of countries listed here where deals have taken place, but for the most part, it's fairly sporadic, maybe 1 or 2 deals per country. And of course, many countries where no deals have occurred and hence aren't listed here. There are, though, 2 real big spikes in the exploration curve. We've got South Africa and Namibia, where we saw a number of transactions take place throughout 2017 and 2018. Now, this next slide looks to talk to what we would call market momentum. Now, there's a lot going on in this slide, so I'll take a couple of moments just to explain what we're showing here. A&D activity on a month-by-month, even quarter-by-quarter basis is highly variable. And as such, just to smooth this out and to observe some trends, we've taken the 6-month trailing average for deal count, as represented by the black bar, and the corresponding deal value, as represented by the blue bars. And just to provide a bit of macro context, we've overlaid that with the Brent oil price in green. What we can see is, as we transitioned out of the previous oil price crash of 2015 and 2016, market momentum actually returned fairly quickly. Having hit lows of $26 per barrel in January 2016, we actually returned to some positive market momentum within kind of 6 to 9 months. And this really built and heated the market until we reached a peak in Q1 2017. This market was largely driven by production transactions and development transactions. And following this peak, the market then really saw the explosion of exploration transactions, which really dominated the market throughout 2017 and 2018, really supported by the fact that we were experiencing an underlying increase in the oil price, getting up to $80 by the end of 2018. Now, the market then heated up once more at the very back end of 2018. We saw again another run on exploration, transactions happening up in the MSGBC region. We had some in East Africa. There was a bit of a run in South Africa prior to the Royal Pudder Spud. But following this initial peak, we then had a bit of a drop-off. And this has really been the story for the first half of 2019, where we saw a real drop-off in deal flow activity, perhaps related somewhat to a lag effect from the drop in the oil price we saw at the back end of 2018. But this M&A and A&D cooling effect that we saw in 2019 was really reflected in other markets as well. The onshore US market and the UK market as examples, two of the probably most liquid markets in the world for upstream assets. So this was certainly a global issue that we experienced last year. However, at the midpoint of 2019, the market, while still on a general downward trend in terms of liquidity and deal flow, was propped up by a series of few but very large multi-million and multi-billion dollar transactions, with the likes of Oxy taking over Anadarko, the subsequent spin-off of assets there to Total in Mozambique and South Africa. We had BP selling assets in Egypt to Enoch Dragon. We had Lukoil buying production in Congo from Lukoil. And so whilst the market was propped up from a value standpoint, it was certainly not reflective of the wider market, and we did continue on this downward trend. And as we've hit 2020, this downward trend has really just been amplified by the current market crash. So what do we predict or foresee as we move forward over the latter half of 2020 and into 2021? Well, one of the challenges is going to be exploration, and we continue to see the exploration market really being quite tight as we move forward. Naturally, companies are currently focused on cash flow, and therefore budgets have been cut. And as one expects, exploration budgets are typically one of the first budgets to go. However, we do see a market opening up for production and development transactions over the next 6 to 12 months, and that's where we expect the market to head, similar to what we saw after the 2016 oil price crash. Speaking with companies and clients, one of the comments that we've been met with a couple of times now is perhaps the African market had become a bit stale. Similar assets were on the market, maybe doing their second or third iteration of an attempted sale, and there was a lack of new opportunities available. If there's one thing we do know, though, about a market crash is that it will lead to a rejuvenation of assets. We'll see assets hit the market that previously weren't available due to distressed sales, companies electing to divest non-core assets, for example. And as such, this will naturally build a bit of momentum in the market. And as long as we have some stability in the oil price, that's how we expect things to occur over the coming months. Now, one of the fantastic things about working and dealing in Africa is just the range of companies that do business here. From majors all the way down to small IOCs, you've got the African-focused NOCs, as well as more international-focused NOCs, private companies, all doing a range of different deals, different sizes, and different assets. One of the interesting observations to have made over the past 4.5 years has really been the role the majors have played. Despite accounting for what is a relatively modest number of deals in the grand scheme of things, the majors have heavily invested in a number of significant projects. We've particularly seen that in gas developments, the likes of ExxonMobil and Total down in Mozambique, BP with its investments in Zohr in Egypt, and of course their investments in the Tortue gas developments in West Africa. But we've also seen the majors really invest at the bottom end of the market at exploration as well. We've seen the likes of Total and ExxonMobil farming into Namibia, BP and Shell aligning with Cosmos in various regions of Africa as well. So it's been interesting to see the role that the majors have played, because we have lost, unfortunately, a number of traditional explorers from the market over the past few years. And as such, the majors have really come in and taken up some of that slack. And it'll be interesting to see how that progresses as we move forward. Now, during this time period, the past 4.5 years, we've tracked over 200 transactions, about 210 separate transactions, and that's involved 107 different buyers. So on the face of it, a very robust, strong, diverse buyer group, all doing deals. However, one of the main challenges for sellers is really the lack of repeat buyers. Now, if we dig into the data a bit further and look at these 107 proven buyers, what we find is actually 60% of these buyers have only carried out one transaction. So in this time frame, they've come to the market, they've done their deal, but they have not returned. That's not to say they're not looking, but in terms of putting pen to paper, only one transaction has been signed. And furthermore, when we look at the data, we see that actually less than 20%, just about 19% of this buyer pool have carried out more than 2 transactions. So you can really get a feel for some of the challenges that sellers are met with when trying to attract a buyer to their asset. It really involves needing to cast the net wide, having a wide knowledge of the potential buyer pool, not just limiting yourself to proven buyers. In some of our conversations with clients, when we're discussing who to approach on a marketing campaign, there's often a question of having a very tailored and structured, focused buyer pool to target. Maybe 5-10 companies comprised of people in the asset next door or in the asset itself. And whilst we would certainly advocate contacting these types of companies, we know that the data suggests we really need to cast the net wide to maximize the chance of a sale, but also to maximize the value that the client can obtain for that asset. And often what we find is actually that the best buyer market to engage, and one that does require some specialist knowledge of, is the new entrant market. Those companies who are looking to do deals in countries they're not currently in. And what we find is actually over half of the deals done within Africa occur with new entrants as the buyer. And just to go into a slightly more granularity on that point, we've presented a few figures here which really show the impact that new entrants have both geographically, by time, and also by asset type. Starting at the left-hand side with the map of Africa here, we can see that for all countries where we've had traditional A&D activity over the past 4.5 years, new entrants have played a pretty vital role in these markets. Aside from a couple of exceptions where new entrants have not played a role, which is largely down to limited deal flow and also perceived above ground risks, we can see that new entrants play a vital role for the A&D space. And it's a theme which is consistent by time. We can see that every year, 2016 through till present day, over half of the transactions announced involve a new entrant who is the buyer for an asset. And it's the same by asset type: exploration, development, or production. We're often asked by clients and companies, why is it that new entrants are the successful bidder? And of course, every deal is different, every asset is different. And in some instances, we're dealing in geographies where there is a limited in-country buyer pool in the first place. However, what we see in our job as an advisor is that we actually see these new entrants having a much more bullish approach to the market for assets, because they're often operating with a strict mandate from management or board level to get into certain geographies or to get into certain asset types. And hence, whilst there may be interest from other companies, perhaps in-country companies who take a passive interest in the A&D market, the new entrants are much more aggressive in their valuations and hence often come out on top as the successful bidder. Now, just before I finish up today, I did want to spend just a couple of moments speaking about some of the challenges that we've had to adapt to as part of our sales processes in light of the COVID pandemic. Now, we at Stellar are very much involved in a face-to-face business, and that has typically happened in physical form. Lots of meetings, hosting of data rooms, hosting of management presentations. However, with the restrictions on people movement as a result of COVID pandemic and ultimately remote working for so many people, it's really meant that we've had to adapt to this sales process in order for business to continue as normal as possible. This has resulted in us ultimately running our mandates in a virtual environment with virtual management presentations, virtual data rooms. And we're really pleased to say that we've had a real fantastic feedback from not only clients, but also the participating companies in these processes who've really been impressed with how smooth running this has gone. And ultimately, these are processes that we think we will need to adopt in the longer term, even as restrictions ease on people movement. As companies start returning staff to offices, we still see a need for ultimately hosting processes in a virtual format, because there are going to be restrictions on particularly international travel, and of course people's actual own wants of perhaps not being comfortable in those situations. And as such, if we are able to run a process as well as a physical form, that's what we will continue to do so. So we've been really pleased with how the past 4 or 5 months has gone from a process standpoint, and are happy to discuss that with anyone who's interested. So finally, just to summarize, prior to the 2020 market crash, A&D activity has continued across Africa, and that's largely been led the way by West Africa, which has really dominated from a market share standpoint. Whilst exploration has really underpinned the market, it has been the development and production assets which have attracted the most value, accounting for over 90% of the value that we see spent in Africa in A&D. Now, as I mentioned, exploration has been particularly high. We've seen exploration transactions dominate the market, particularly in 2017 and 2018. However, we did see this decline. There was a drop-off in 2019, and we expect this drop-off to really continue throughout 2020 and into the future. Having said that, there are some high-impact wells coming up in Namibia, for example, where success may well reignite the market, but exploration is certainly going to be challenged, and certainly having a more diminished buyer pool to select from as we move forward. As I mentioned just now, the current downturn will no doubt reduce the buyer market. Companies, many of them, are focused on their internal operations, managing cash flow, keeping heads above water. However, we do see there being an opportunity for well-capitalized companies to take advantage, be that majors, NOCs, large IOCs, and perhaps actually private companies, not just specific to private equity, but privately held companies being able to play an important role, i.e. those companies who are well capitalized and can take advantage of this downturn. We certainly see there being scope for sales processes to continue, but it is essential that the right buyer audience is engaged, probably now more than ever. It's really going to require sellers to have a really in-depth view of the market and potential market in order to attract interest to their assets. As I described on the previous slide, protocols need to be in place to allow the smooth running of processes, both for functionality and security, and also efficiency. It's essential that sellers make sure that they are well versed in how to run these processes virtually, so that they can make sure they capture the market and run as an efficient a process as possible.